Hi, today we are going to start a new topic, that is income from salary. But before understanding the concept of salary, let's understand what are the various incomes which can be charged under the head of salary. Because till now, the perception which you might be having in your mind regarding to the head of salary might be very narrow. Let me tell you, Section 17 subsection 1 includes various items which can be covered under the head of salary, which can be your regular salary, that is basic salary. Apart from that, that can be wages, that can be annuity, pension, any advance salary which you have received. It also includes any gratuity, any fees, any commissions or perquisites which you have received during your tenure of employment, any leave encashment which you have received, etc. All the heads are included under the head of salary itself. First, let's begin with the first topic, that is leave encashment. Before that, let's understand the meaning of leave encashment. So if I say any employee during the tenure of his employment receives certain leaves as per the policy of the company. Let's say in your company, the company has the policy that employee is allowed to take 30 leaves, that is 30 leaves in 1 year. And you have given the service to the company for the time period of 10 years, which means you will be eligible for 300 leaves, right? Now let's say during your tenure of 10 years, out of 300 leaves, you have only availed 200 leaves. In that case, you are eligible to take cash encashment with respect to your 100 outstanding leaves which you have not taken. So either during the tenure of your employment or at the time of retirement, any unused leave which you are having in your account, you will get paid for, and that is known as leave encashment. Let's understand the taxability of leave encashment. So you might receive leave encashment either during your tenure of service or at the time of retirement. If you are receiving any amount of leave encashment during the tenure of your service, it will be fully taxable. However, if you are receiving leave encashment at the time of retirement, in that case, it will be bifurcated into two parts. One, either you are government employee, in that case, the whole leave encashment will be fully exempt. You don't need to pay any tax on the amount received for leave encashment. Or you can be non-government employee. What would happen in non-government employee? So, if you are a non-government employee, it would be exempted, but up to certain portion only. In that case, leave encashment would be exempted up to the amount which you have actually received, or leave salary as you are calculating as per income tax law, or 10 months average salary, which is your last 10 months average salary before retirement, or 3 lakh rupees. Out of these four, whichever is lower would be exempted, and the rest of the amount would be taxable. Let's say if you have received 4 lakh rupees leave encashment, and by calculating these four options, the minimum amount is 3 lakh rupees. In that case, 3 lakh would be exempted, and the remaining of the 1 lakh rupees, as you have received 4 lakh rupees, so the remaining of the 1 lakh rupees will be completely taxable. One more time, leave encashment, either you might receive during the tenure of your service or after the tenure of your service. During the tenure of your service, any kind of employee you are, government, non-government employee, it would be completely taxable. But in case of retirement, if you are receiving leave encashment, in that case, if you are government employee, it would be completely exempt. You don't need to pay any tax on the same. But in case of non-government employee, it would be exempted up to certain extent, and that is calculated by these 4 points. Let's come to next portion, that is gratuity. Now gratuity is basically retirement benefit received by an employee for the moratorium services rendered to the employer. Gratuity, that is also bifurcated into 2 parts. One, either you are a government employee or you are non-government employee. If you are government employee, sir, in that case, any amount of gratuity you are receiving, that would be completely exempted. Again, a benefit of being a government employee. But in case if you are non-government employee, in that case, it will be bifurcated into further 2 parts. One, whether either you are covered under Gratuity Act or you might not be covered under Gratuity Act. If you are covered under Gratuity Act, in that case, the minimum of the following would be exempted. First, 20 lakh rupees. Second, any gratuity which you have actually received. Third, 15 into 26. 15 divided by 26 into any leave salary during the last drawn salary during the tenure of your employment. So out of these three, whatever the minimum amount is would be completely exempted and the rest of the amount is taxable. Again, let me explain you by an example. Let's say you have received the gratuity of 30 lakh rupees, and by doing the calculation of these 3 points, let's say the minimum amount which is coming, that is 20 lakh rupees. Now in that case, you have received 30 lakh. However, the exempted portion is 20 lakh because whichever is minimum is exempt. And in that case, the remaining of the amount of 10 lakh is taxable in your hand. Let's say if you are not covered under Gratuity Act, in that case, minimum of the following would be exempt. First is 20 lakh. Second is the actual gratuities which you have received. So the basic first and second point would remain same. The third point would be different in that instead of 15 divided by 26, now it would be 1 by 2. And the second difference in if you are covered under Gratuity Act, what was written? The last drawn salary. However, here it would be 1 by 2 into average salary of last 10 months. This is the basic two difference if you are covered under Gratuity Act or if you are not covered under Gratuity Act. One more difference which you need to take care of. If you are covered under Gratuity Act, in that case, what I have written is you need to consider the fraction. What do I mean by you need to consider the fraction? So let's say you have done job for 12 years and 8 months. In that case, if you are covered under Gratuity Act, you need to consider the fraction, which means it would be rounded off to 13 years. So if it is more than 6 months, it would be rounded off to next year. However, if you are not covered under Gratuity Act, in that case, you need to ignore the fraction. Which means again, if you are given job or if you are given service for 12 years and 8 months, in that case, by ignoring the fraction, it would be going to be 12 years only. Let's talk about pension. Now, pension is usually bifurcated into two parts. One is uncommuted pension, second is commuted pension. Let's understand the difference between uncommuted pension and commuted pension. So, if you are receiving pension in installments, it would be considered as uncommuted pension. However, if you are receiving pension in a lump sum, in that case, it is considered as commuted pension. Let me give an example. So, if you are supposed to receive 10 lakh rupees as pension, and if you are receiving a certain amount, let's say 1 lakh rupees every year for 10 years, it would be considered as uncommuted pension. But if you are receiving 10 lakh rupees in a lump sum, so in that case, it would be considered as commuted pension. Let's understand the taxability of the same. If you are receiving uncommuted pension, it would be completely exempted. So irrespective of your government employee, non-government employee, if you are receiving uncommuted pension, it is completely exempted. But if you are receiving commuted pension and you are a government employee, in that case, the pension amount is going to be completely exempted. Again, a benefit of being a government employee. But if you are a non-government employee, in that case, the amount would be exempted, but that exemption would be restricted up to certain portion, just like leave encashment. So what is that restriction? So if you are receiving commuted pension and if you are a non-government employee, in that case, you need to check either you are receiving gratuity or you might not be receiving gratuity. So in case of commuted pension for non-government employee, if you are receiving gratuity, in that case, 1/3 of the commuted pension or the actual commuted pension which you have received would be exempted. However, if you are not covered under Gratuity Act, in that case, in place of 1/3, it would be 1/2. So half of your commuted pension or actual commuted pension, which you will calculate by doing the reverse calculation, would be exempted. And again, the rest of the amount would be taxable. So in this session, we have covered leave encashment, gratuity and pension. In next session, we will talk about perquisites and allowances. Thank you.